Traders, a brand new trading week is upon us, and it is going to be a very, very volatile week. It is going to be a lot of movement and ultimately a lot of money to be made. So I'm going to be looking at the charts in just a moment. We have interest rates coming in on Japan, interest rates in the US, interest rates in Canada, guys, and we even have NFP this week. So I think we have NFP this week as well. So it is a packed week, and you cannot afford to miss out on all the action. So in just a moment, I am going to share my charts, and I'm going to show you what I am looking at, starting from last week, the way the market shaped up last week, and now the opportunities are ripe this week, and of course, we are going to be capitalizing on that as well. But before I get into it, I want us to say a big thank you to FP Market, because FP Market is sponsoring today's live market analysis. Of course, I'm breaking it down technically and fundamentally. So we're saying a very big thank you to FP Markets for sponsoring today's episode. So let's jump into the charts, shall we? Now, looking at what we have in front of us right now, this is Euro USD. And from what I did say, there is interest rate coming in on the dollar, and of course the interest rate is not expected to be changed from 4.5%. They're not expecting to change the rates at all, but what we are looking at is we have interest rates. The market is not expecting that to change, and if the rates are not changed, if the rates are not cut, of course we are expected to continue in the direction that we are continuing in right now. So that's exactly what we are looking at. That means that the rates are not coming down. The dollar is definitely going to continue on the path that it is currently going at. So right now we have Euro USD, and the market just opened. I am just recording this at around maybe 11. I'm not sure what the time is. Just recording this around maybe 11. So the market just opened, and we're expecting it opened with a gap. So I'm expecting the market to come back down maybe sometime in the morning, whatever. Just close this gap, and then we continue this buy, because last week we had a very, very lovely, the market cleared this low here. We had a breach of this liquidity, and if you look at it on the daily time frame, this is typically what you refer to as rejection. So you can see the market hit this zone, closed all of this fair value gap, and is rejecting, and we are setting ourselves up for a much larger run. Even though I'm not looking at this right now, we're not ultimately looking at this run here. What we are looking at, what we are concerning ourselves with right now, is this much larger run here as well. So this, first of all, this target is the first, and then next we have our attentions to this to this target here at 1.19745. So that's exactly what I'm looking at. So you must understand that when we are looking at these pairs, what we are trying to find is that we are trying to find a long-term potential direction, and we are scaling down to lower time frame. Myself, I like to keep it at a 4-hour, and then most times I might get in on the hourly, but most times my entries are taken on the 4-hour and of course on the daily time frame, and I'm looking to ride a long wave. So we identify a long-term direction using the fundamentals, and of course what we can see here, the interest rates are not likely going to be cut, and I'm not expecting any new rate cuts this week. No new surprises coming in at all this week. The only thing that might be a bit different might be the unemployment rate. The unemployment rate is just 4.2%. It's basically the same thing. And if that happens to come out at 4.2%, that would naturally mean that, we have a higher unemployment. We have a higher unemployment compared to what we had last time, So remember that unemployment number is counting the eligible members of the workforce that are unemployed, not the ineligible members. The eligible members of the workforce that are unemployed, that is exactly what the unemployment number is measuring. Of course, the last time it was 4.1%. Now we are coming in at 4.2%. The market is expecting 4.2%. And the last NFP that came out was 147,000. But this time around, the market is forecasting that we're likely going to have 102,000. That would make it far worse than what it was the last time. That means the U.S. economy is creating less jobs, and ultimately, if this number comes true, or it maybe comes true and is not as high as what we had last month, investors are going to slap the dollar hard, and of course, we are going to see a big rally on the euro, the pound, and of course, I saw another position right there on AUD USD. Very lovely trade as well. Of course, there's a gap as well. But for AUD USD, I'm expecting the market to tap into this fair value gap before we, ride the wave. That is what I am expecting with AED, USD, SZD. There is another fair value gap, very big one here. There's a big fair value gap. Most likely, if we tap into this, looks very, very decent, looks very, very good. I like the look of all of this. And, so you can put the stops here. And if you put the stops there, there is a lot of room to the upside. There's a lot of room to the upside. You can see how we took the high right here at this point. And the moment we took that high, we turned around. But that's not really what I'm looking at. So in external range liquidity back to internal range liquidity, I'm looking to see a market that goes from this point all the way to these highs here, these areas here. That's what I'm looking at. So generally, I'm expecting dollar weakness across the board. And this is Japanese yen. Last week I was short the Japanese yen, but then the market turned around and took me out for small profits, which is completely fine by me. I don't mind. I'm not in control of the markets. You have to, when I'm planning my trades, I also factor in the break-evens, the losses, and all of these things. So there's nothing new. There's no surprise coming in for me at all at any point in time in the market. So this JPY pair, in this area, we could see some decent move all the way to these lows, and that would also run the liquidity above this high and also run the liquidity above this high, filling this fair value gap effectively. And we're likely going to continue to see, further downward movement. So that is what we're expecting. That is what I'm looking at. Bank of Japan is not expected to change rates. The Federal Reserve is not expected to change rates. And of course, Bank of Canada is also not expected to change rates. So that is what we are looking at. That is what I have my eyes on for the coming week. This is my outright plan. And of course, I will be sharing this within the Telegram community. So of course, as soon as I take the trade, I'll share a screenshot, probably show my entries and exits. I'm not sending it in there as a signal, but I'm showing the community what I am doing when I am getting in. And of course, if I'm getting out of trade, I'll also alert the community as well. So if that's something you're interested in, join the Telegram community. It's not a signal group. It's just a group where I share my information, share technical analysis, fundamental analysis, and all of these things. So, have a very wonderful trading week. And of course, thank you to FP Markets for sponsoring today's market analysis. And I'll be more than happy to see you in the next one. Cheers.